I've bought $40 million worth of rental properties, all without using any of my own money. What does that mean? That means I borrowed money from people and banks to make that happen. In this video, I'm gonna go over my 3-bucket theory, which basically buckets my loans into 3 separate buckets to make it kind of understandable, to show you how I get my loans and how I properly leverage debt, AKA borrow people's money, to grow wealth. I recently actually just made an Instagram story and asked people for what they wanted to hear more about. And a lot of people said, I want to hear about loans. How do you structure your loans and what type of loans do you use to buy real estate and buy rental properties? So that's what we're gonna get into. Make sure to stay tuned to the end to hear Maisie's joke of the day. I'm gonna introduce the 3 buckets now, and then we're gonna deep dive into each bucket. The first bucket is the purchase bucket. This is the bucket you use to purchase distressed, discounted properties. Bucket 2 is the rehab bucket. This is the bucket and the money you use to fix that property up and either get it ready to rent or ready to sell. And bucket 3 is the long-term financing bucket. This is the bucket that you're gonna use if you wanna keep it as a rental property. So all that real estate I've been able to buy, I haven't used my own money to buy it. And I bought all of it, pretty much all of it, as distressed properties at deep discounts. So in order to do that, you need to come to the table with your offer with a all cash offer. Now it is all cash, but it's not your cash. So these are the sources that I use to buy those properties. The 2 main ones, and the only ones I really want to get into today, are private money lenders and hard money lenders. Those are both lenders that will lend you money on a property that needs work. I want to get this out of the way. A lot of people say, why don't you go to the banks and borrow at 4% to buy and fix up a property? Banks don't want anything to do with distressed properties that need work. Large banks, Bank of America, those banks definitely don't. Even the small local banks don't really want to mess with those type of properties. There's too much risk involved when you're buying a property that needs $50,000 worth of work to even get a tenant or even to sell it. That's too much risk. These banks will happily lend you money, that's the last bucket, but the property must be fixed up and in rent-ready condition and rented. So banks won't do it. That's why you need private lenders and hard money lenders. Private lenders is what you want. Now, sometimes it takes time to find them. You can use hard money in the meantime. Private lenders are people you know, or acquaintances or friends or family, just people with extra money that want to invest in real estate. They maybe don't want to do the work themselves, but they know that real estate's a good investment, or they just want to diversify their investment portfolio. 90-something% of the time, it's not a rich parent or rich uncle. It's not somebody with tens of millions of dollars. It's an insurance agent. It's your grandma's neighbor. It's your parents' boss. It's your friend of a friend. Somebody that does pretty well for themselves and looking to diversify and get in real estate, but not really do all the work. So they're more than happy to give you the money and have you buy the property, fix it up, do all the hard work, and collect interest payment, usually maybe that 8 to 12% for allowing you to do that. So private lenders usually make 8 to 12%, kind of depending on the relationship, depending on the deal, and it's annualized. So it's a good, almost double-digit return, sometimes more than double-digit return for zero work on their part. So that's why they do it. That's why they give you the money, because they don't want to find the property. They don't want to rehab the property. They don't want to manage that. They don't want to get a tenant in place. They don't want to do all that. They just want to give you money and make a decent return on the money that they give you, and they're super protected because it's backed by the real estate. A lot of people will tell me, why would they lend you money? There's no collateral. The collateral is the property they're lending you. You're buying a property that's distressed, but you're buying it at a discount. So they're gonna have some type of lien or some type of legal ownership in that property in case you default or in case something happens to you. So that's how they're protected. They're protected by the property. As soon as you refinance it or sell it, they are off of it, they're done, they got their money back plus interest. They no longer have any ownership or lien on that property. So that's kind of how they're protected a little bit. So it's a very, very safe investment for them, especially if you know what you're doing. And if you want to know what you're doing, obviously check out this channel and all the other channels on YouTube that talk about how to do things the right way. Check out the description below after this video if you want to see my free training on this. Now on to hard money lenders. We are still in that first bucket, that purchase bucket. Hard money lenders are companies that are in business. The whole sole purpose they exist is to lend money to real estate investors. And guess what? Most of them want to grow their business. Most of them want to make more money. Most of them have more money than they know what to do with. So they will take chances on new investors. You don't have to be a seasoned investor to work with a hard money lender. Hard money lenders are incredible to work with, especially at first. The good ones will help you underwrite the deal. They're gonna look at the property, they're gonna walk it with you, they're gonna tell you what they think it's worth, they're gonna tell you how much they think it needs, because they don't want to have to take that loan back. They want you to be successful, they want this to work out, and then they want you to come back to them and continue to borrow. So they can make money on you. So they will be a second set of eyes and make sure, hopefully, that you're buying a good deal. And most of the time, these are super experienced people. They know what the market's gonna bear. They know how much it's gonna take in order to rehab that property. And they're gonna confirm your numbers or give you some feedback and tell you, this is what will lend and here's why. And maybe that'll give you a chance to go back and renegotiate if you bought the property a little bit higher than that. Or you just have to come out of pocket a little bit to make the difference up. Hard money lenders are super easy to find. Just Google hard money lenders near me, or go to your local real estate investing meetups and ask the other investors who they use for hard money, or go to your local real estate investing Facebook groups and just post who is the best hard money lenders in town. You will have a multitude of hard money lenders to call if you do those 3 things, and you'll have your choice of who to pick. Most of the best ones, in my opinion, are local, but there are national ones that will work in any state. All right, now that you have a couple different sources to go and cultivate in order to purchase these distressed properties, you need to rehab said distressed properties. Bucket 2 has a few similar lenders to Bucket 1, but there's also other options. Most private money lenders will lend you the money to purchase and to fix up the property. So one good private money lender can cover Bucket 1 and Bucket 2. They'll give you enough money to purchase and fix it up. They usually don't require monthly interest payments. You just pay them back at the end when you refinance it or when you sell it. Similarly with hard money lenders, a lot of them will lend 100% of purchase and up to, not always, but up to 100% of the rehab. So private money lenders and hard money lenders, a lot of them will work in Bucket 1 and Bucket 2. The only issue with hard money lenders is lots of times they will require monthly interest only payments. So you do have to come out of pocket a little bit or get creative during that 2, 3, 4, 5 months rehab. But if you run your numbers right, you'll get that money back on the refinance or the sell. You can also do a combination of those two. You can use a hard money lender for the purchase and a private money lender for the rehab. So you can get creative in Bucket 1 and Bucket 2. And you can also use some of your own sources to fund the rehab. You can use a home equity line of credit on your personal house. Houses have gone up a crap ton in value over the past couple of years, so more than likely you have a lot of equity in your personal house. Now you can take a little bit of that equity and pull out what's called a home equity line of credit. Small local banks, big banks will even do them, and you can do whatever you want with that money. You're basically just borrowing from the equity on your personal property. It's kind of taking a credit card out on your personal house. So you can use a home equity line of credit, or you can use an actual credit card. I know several people that have found some, 6 months 0% credit cards or 12 months 0% credit cards. So as long as they're borrowing that money and they're paying it back in that 6 or 12 month time frame, they're paying 0 interest on that. Now you gotta be careful if you're gonna get into credit card debt, but if you run your numbers right, you're in credit card debt or you're in debt with yourself or you're in debt with a lender, either way it's debt, so just be careful in running your numbers, but that's an option as well. You can borrow against an IRA or 401k or money market account. I don't wanna get too complicated, so just know for the second bucket, hard money lenders, private money lenders, lines of credit on your personal house or other investments, and credit cards are good options. Now, if you're flipping a property, you're done here. You bought it, you fix it up. Hopefully you're selling it for much more than you bought it and fixed it up for, which allows you to take that money, pay off your initial lender or lenders plus interest, and whatever's left over will be your profit. But if you're wanting to keep it as a rental property, which I suggest doing, that's what I have an entire mentorship on, and that's where I have students creating millions of dollars worth of wealth, is owning rental properties. Flipping is fine, that's a good way to make active income, but you're not gonna create wealth that way, you're just gonna make some extra money. If you wanna create wealth, you need to really understand and look into bucket 3, which is your long-term financing, which will allow you to own rental properties at a low interest rate with a low monthly mortgage so that you can cash flow and take advantage of what real estate does. If you can buy the property and fix it up with bucket 1 and 2 without using any of your own money, then you get on to bucket 3, which I'm going to talk about, which is the long-term financing bucket. You pay back the first 2, and then you let real estate do what it do. It's gonna go up in value, the mortgage is gonna be paid down by the tenant, and you didn't use any of your own money to do that, and you can collect cash flow along the way. The 2 main sources of bucket 3, the long-term financing bucket, are small local banks and credit unions. So let's talk about those here quickly. Small local banks are in business, but one of the main reasons they're able to stay in business is they love to lend on investment properties. These are small local banks. First State Bank of this county. There's these small community banks, they're usually like I said, named after a city or named after a county. They're not these big national Wells Fargo, Bank of America, but go to these small local banks. Talk to the commercial lending division. You're usually going to be talking to some type of owner of the bank or some senior vice president. You're able to talk to somebody that has power once you walk into the bank and talk to the right people. These small local banks, they are in business and profitable because they lend money to real estate investors like you and I. That's how they stay in business. They have a completely different set of rules to follow, a much smaller rule book than these big national banks. So the fact that they are local, that they're owned by a person that you can talk to, and they have different rules to follow, they will gladly lend you money. Most of them will lend up to 80% of the appraised value of a property. If you're utilizing the BRRRR method, if you're putting 20% down, that's fine too. They will happily lend on investment properties. They understand real estate, they understand investments, and they understand that if you buy a property that has equity built in, or you pay for that equity by putting 20% down, and you have a tenant that pays the mortgage and all owning expenses, that's a win-win for everybody. They're getting more loans. If they make an arbitrage, they borrow money at 0.5% and loan it to you at 4.5%. So they're making a little bit of money on that. So they want to do more volume to make more money. And you're winning because you get long-term low rate financing and the rent's paying for all of it. So it's a win-win-win for everybody. Similarly, credit unions will do the same thing. I want to be honest with you, I'm not as familiar with these credit unions. I have never actually used ones, but I know people that have. They're very similar to these small local banks. Basically, they're borrowing money at an extremely low rate and lending it to you over 20, 25, 30 years at a low interest rate, which allows you to pay a little bit every month so that that rent will cover everything. So if you get a grasp on bucket 1, 2, and 3, you can flip, you can even wholesale, or you can own rental properties all without using any of your own money. All right, here's Maisie's joke of the day. What is brown and sticky? A stick. Get it? All right, well, check out this video over here. This is where I walk through a real life rental property. I talk about the refinance step. I talk about dealing with my private lender, and I talk about dealing with the bank. So it'll kind of give you a real life example of what I talked about in this video. And if you haven't, hit the like button and subscribe.